Welcome back to Factful Finance. What if I told you that the S&P 500 just lost $4 trillion in value? That's right, $4 trillion. And you might be thinking, what does that mean for my 401k? Well, if you've been feeling uneasy about your retirement savings recently, you're not alone. The market has been on a roller coaster, and it's more important than ever to understand how these massive shifts can affect your future financial security. Now, before we dive in, a quick disclaimer. This content is for educational purposes only. Mentioning any apps, products, or services is not an endorsement. Always consult a certified financial professional for personalized guidance. Let's break it down. The S&P 500, which tracks 500 of the largest publicly traded companies in the US, has seen a steep decline, down over 8% from its all-time high in February. This drop is largely driven by rising economic uncertainty, particularly around tariffs and trade policies. President Trump's tariff disputes have created a level of instability that has spooked investors, wiping out trillions in value. So, how does this affect your 401k? First, let's understand how the S&P 500 impacts most retirement plans. Many 401k accounts are built around stock market exposure, with a significant portion invested in index funds that mirror the performance of the S&P 500. So when the index drops, it means your retirement savings could take a hit too, especially if you're more exposed to stocks than bonds. For example, let's say you're like Emma, who's been steadily building her 401k over the years. A few months ago, her balance was on track to hit a nice six-figure mark. But now, with this drop in the S&P 500, she's seeing a smaller number on her account statement. If she's invested heavily in stocks, her portfolio's value has likely fallen. But here's the catch. Emma doesn't need to panic. The reality is, these market dips are normal. Stocks rise and fall. And while this drop might seem significant now, it doesn't spell the end of your retirement dreams. In fact, some experts say market corrections like this can offer opportunities to buy low, especially if you're in your 30s or 40s. If you're investing for the long term, fluctuations are part of the journey. But that doesn't mean you should just sit back and ignore the storm. You need to be strategic. If you're worried about volatility, consider rebalancing your portfolio. Diversifying your investments, adding more bonds or other safer assets, can help cushion against big swings in the market. On the flip side, if you're close to retirement, you might want to take a more cautious approach. The closer you are to withdrawing those funds, the less time you have for your investments to recover from sharp drops like this. You don't want to be forced to sell during a market low. Let's also talk about something that's often overlooked in retirement planning: fees. Even a small fee can compound over time, so it's important to make sure you're not paying too much in fund management fees, especially during market downturns. So what's the key takeaway here? The drop in the S&P 500 is certainly alarming, but it doesn't mean you should throw in the towel. Instead, use this as an opportunity to evaluate your retirement strategy. Are you too reliant on stocks? Is your portfolio balanced? If you're still in the early stages of saving for retirement, this might be the perfect time to scoop up some discounted shares and set yourself up for the future. Before I let you go, I want to hear from you. What's your strategy when markets drop? Do you stay the course, or do you tweak your investments? Drop your thoughts in the comments. I read every single one. And remember, if you're unsure about how this drop affects your specific 401k, always reach out to a certified financial planner, CFP. They can help you navigate this uncertain terrain with expert guidance tailored to your situation. If this video helped clear up some confusion about the S&P 500 and your 401k, hit that like button and don't forget to subscribe. We've got even more in-depth financial strategies coming your way, so stick around. Thanks for watching, and I'll see you in the next one. Keep those finances strong, and remember, planning for your future today starts with what you do now.